Hey, DJ here from PTA. Want to go over support and resistance today to kind of give you an idea how you should be looking at it from a top-down analysis point. I think this is needed. I've seen a few people do it very well, but I've had a few members and people ask me to kind of do a video on just support and resistance and how I view it. So I want to do a quick video on it because I don't think it's something you got to get super intense about, but it'll at least give you an idea how to look at charts. This chart in particular is from Roku. This is back in 2019. Had a big drop off, and I want to kind of show you how you can see that drop off from the beginning. So basically, go down to the daily. What you want to do when you're looking at top-down analysis is really look at the zones, look at the areas. Now, what areas are important? Any area that comes up with a gap up, okay? So this area here that used to play as support or resistance is now support. From here, rejection. This would be ideally resistance. Now, why is that resistance? You can see that it rejected there, moved up, broke down, came back, and then it acted as resistance here and then became support, so on and so forth. So those are two key areas there. Same with here, as well as here. Now, why is that resistance? Came up, it pulled back down, then it broke through, and then right here it tested this area before going higher. This is obviously resistance as well. Give me a second here. This right here, resistance as well, 176.55. That's the highest point. Now, if you look at this and see that it gapped down, the reason for that gap down was because of news. So let me go back here. So right here, you had some news come out, and then you had a nice big rally, and then the information came out that they didn't get the beat here, and that's what made the drop off. Now that you have your areas or zones, demand and supply zones, you can kind of get an idea of where this stock may go. After this big drop off, everyone's going to be paying attention to this 137.09 area. Now, why is that? Well, we just had this big pull up. So this makes this an area of resistance. It rejected, and then it's coming up to this monthly, previous month area as an interest of resistance. So these are all your key areas to take a look at the stock. So what traders do is they wait for price to get to that key area before they place a trade or to analyze that trade. Now this day here is September 16th, 2019. So let's go another day, which is the 17th. So now that we got the 17th on here, we're still holding high. But if you can look and see, zoom in a tad bit. You can see that the volume was pretty high on this day when it brung it back up. So it was a lot of downward pressure. So overall, the stock should be continuously going down. If you look at the volume keys on the down days are much higher than the ones on the up days. So this would be considered like sideways price action or consolidation. Let's go another day. So now that you see this stock actually came back up to this support before flushing through two supports in one day. So this was the day that it moved. Let's go back to the chart and zoom in to see what that actually looked like. So this is the first day that it bounced, and this is that week or couple days of consolidation. So this is the day that it went down, dropped, made a new high, entry day high, and then kind of went sideways for the next couple of days. It gapped down, and then early in the morning it had a big jump, pulled down to an area, and then flushed. So when you're looking at this, this is how you would have played this off of support and resistance. We already knew that the key area was 143.88. So what did it do? It went back up to 140, went back up to 145, which is what they entice the longs with when they think the stock is going in reverse. Because right here is where it looks like it held a little bit of support. So in intraday support, which would have been right here, you would have, let's say, take off the long extension, and then you would have changed the color. So you'll know that that's an intraday. Let's make this one orange. So this intraday bounce is showing that it was support, came back, retest, went back up. And then as soon as it broke here is where it started to come down. So you would have probably put some type of risk to this line. So you're talking about 81-cent risk. Well, let's just say you risked it $1 right here to enter the trade on the flush, and then it literally flushed from 143.07 back down to 137, and this stayed heavy for the rest of the day. So this was a nice wash back down to the next support. So now that this became support, it broke. Now this is now resistance. Now it's coming back down to test the next support area. It bounced, went sideways, perked back up, which increased the likelihood of longs wanting to get involved. But this was a downward move, so that when it popped back up, which is allowing shorts to take profit, I mean, you got to think it just bounced $5, went back up, and then it eventually just flushed and hit the 137.09, and then continued to go down for the rest of the remainder of the day. Then it hit the next support. Still, if you look at this, this is just a downward move, real easy, and they just follow the line. So it hit the first support at 137.09, then it hit the next support, and then it started to gather around that support area, going sideways basically. So this is a great trade based off of the daily support and resistance. So when you're looking at stocks, this is how you look at these stocks to kind of get an idea as to where these stocks are going, where it's dropping down to by using support and resistance. Now this is just day one of the move. So that day alone, it moved $17. So you would have risked $1, made 17 basically if you just let it hit each support and resistance. And now where is these lines? These lines are coming off of the areas. Again, when I say support and resistance is where it touch or do both moves up and down in the same area. So essentially the support and resistance was here. So this acted as resistance, and then here it acted as support. Each one of those candles act this much, and then it pushed away. Same with here. This acted as support. That's what the S is for, as it did here. The same line you drew back here is the same line that it ended up respecting here. And the shadowing of it is just, you know, the zone. So you might have, some people, I see a lot of traders do what they call demand and supply zones. It's the same thing. So from here to here will be your zone. So as long as it's in the zone, when it broke out of the zone is when everyone got probably extensively heavy. And this is the reason why you had such a massive move on that that day when it came to that zone, because everybody saw that as a supply, as a demand zone, and it broke. This is the reason why it came back into the zone to gather more shares to push it further down. Same concept. So when people, talk about that, that is literally what they're talking about as a support and resistance area. I use lines. Some people use areas. It's all pretty much the same, because you're looking at a specific area that you're actually getting in and watching how price move. As you notice that's where most of the price action go. As soon as it hit this area, this is where you see most of the price action is right around that support and resistance areas. Same with here. You had a lot of price action that happened in this area to let you know that this stock was in a price zone or in a critical area. Same in pre-market. You didn't have anything when it fell here, but all the price action happened right in the zone. So now that's day one move, $17. It hit 1, 2, 3 price support lines, and then it came back up. Now, rightfully, with this massive move down, the next day may be, for the most part, a green day. And the reason I said it might be a continuation bounce. So it actually gapped down, and then people took profit that day. So when people talk about buying a bounce, what they're buying the bounce, or the bounce is buying it off of support. So go back to this chart, smaller time frame. What did it do? It dropped back down, came right back into that supply zone and support zone, because this was trying to act as resistance. This is the reason why you had these big long candles trying to figure out which way it was going to go, because there was so much price action happening first thing in the morning after this massive drop. Everyone was kind of like trying to figure it out, and it looks really choppy on the 1 minute. Just you're talking about literally $5-6 move swinging this way, trying to figure out if it's going to go this way, because realistically we're going against the trend. The overall trend, if we look at it, is down. The overall trend has been down, but these people are actually trying to get out to make profit, and that's why you had all that whipsawing at the beginning of the day. So once it eventually figured out, it squeezed out from that zone, 129.22. It squeezed out from 129.22 back up to $5 one way. So you notice that the stock has a certain range of about $5. When it breaks out of a zone, it's going to move probably about $5 in one direction. It came back, retested this line again, which made longs get really interested in it. And then again, it swung back out another $5 or so in that zone, from the zone. So when we talk about range, that's what the range is of a stock when it talks about in a day. It's really where it swung out from a key area, and that's where you want to kind of be at. So like I said, ideally looking at the chart, that would make sense that this day be green, because it's going to bounce to let these people out, or for them to take cover and make a profit. Let's go to the 20th. Now we had another drop. Now this is what we call a gap fill. A gap fill is basically when a stock is trying to fill a general area that previously was gapped up from. So let's go back to the daily, and you notice that right from here down was just pretty much a gap fill. There was no price action here. It gapped up for today. After that bad news, it just continued to drop. So let's look at the entry day. Now remember, this was the green day that it bounced, which was the 19th. It bounced up, created an area, and then it gapped down. Well, because overall they wanted the stock to go down. This is just people getting out of the position because the overall trend was down. So these are people taking profit, or that would be considered your bounce day, but that's going against the trend. And I mean, there's traders out there that play the bounce very, very well. But one of the key elements of making sure you do very well in trading is to always go with the trend. If there's no trend, don't trade. If you are unsure, or you're trying to go against the trend, no trade. But this, in this instance, is basically people getting out of their position to take profit. They did so, which was still a $5 opportunity both ways. So you could have went this way and made money. But the overall trend overall is down and wanted to go down and go down heavy. So now let's go back to this day so you guys can kind of understand what happened on this day. Once it bounced, it stayed heavy under the previous support. Remember, the day before it supported it. So that was the key area. So when people woke up that next morning, especially longs, probably saw this, seen the breakdown, and was like, oh crap, let me get out. And they just got out first thing in the morning. And you had a massive flush from that area. So looking at it, you know, getting in first thing in the morning with a risk would have been about $2. So overall, this drop was warranted. So what most people did, they jumped in or released more shares or got heavy on that side. And I mean, it literally collapsed from the previous support resistance area back down to the next support area, which was $111. That was another $17 move for the day. And I mean, it just washed. So it was a good solid trade going down. It washed and then hit a low of 103. So from there in the low was $25 in one day. That was a massive move. So how did you know this was going to happen? Well, you playing off support and resistance. So people got in, rolled it down to the 111. It broke and then it went back up. So it's not like it's going to do anything. The price always wants to go back to support and resistance. It always does. So right here on the next day, which was the 23rd, coming into the new week, that Monday, looking at the chart, kind of a consolidation day. After it bounced back up, and look at the swing, the bounce move was probably, you know, $5. So it's just when the stock is going outside of its normal range, you know, this is about, you know, $12, $17, but its normal range is between $5 and $7 on a swing. So when it swung back up, it was a $5 move. Then it kind of just went sideways the next day, which was the 23rd. The next day after that, it continued to fall down. Now, where did it fall down to? Well, it treated this as resistance. And then it went right back down to the next key area, which was 97.28. Now, again, guys, this stuff is not like an exact number. You know, it's a zone. So 97 and 98 might have been a dollar zone or something of that sort. But the whole concept is to get you an idea of what direction or area it may go to. It dropped down. The range, when it's going in range, dropping down, which is the overall trend, was $12. Then if you go back and look at it from the opposite direction, the bounce was about $5, $7. So it's almost like it's a mathematical equation of how the stock is going to move. When it moves, you notice it moves 12, whatever. When it gets aggressively out of range, then it bounces the opposite direction, $5, $7. So it got back down to 97.28. So let's go to the next day. Let's go back to the daily so you guys can see it. It had a massive drop. So now the buyers are trying to step in at this point, which is right above here. So what is this area? Well, this area here, it played as resistance before it gapped up. Just like it was a little bit confused here, it acted as resistance here. So this was a critical area as the support here, and then it broke down. Whenever I see a stock break down or break away in a particular area, that's how I know that that's a zone. So a lot of times you can see your zones beforehand. If you see a stock, like, you know, break down from an area, or it's an area and then it break up to another area of resistance or support. Those are key areas or zones. So this stock came back now after it hits this. It hit 103.36. Let's go back to the 5-minute. That was a zone. And this is why it bottomed out the way it did. It just collapsed. Boom. So even if you had not got in this move, you could have played it off of previous day low. That was an area that it caught some wind. And then it broke down and hit support. And then when it hit support, coming into that next move, let's break that down into a 1-minute. It was a massive sell-off. So when it went this and it bounced back up, people got heavy in at 102 and brought it and sold it down here in the 99. Still a $3 move, even if you missed it. Just being patient, looking at the support, it brought in right off of 105, which was previous day low. It bounced, and then it collapsed into the next support. So that was a $2 move. Probably could have held it because it was still heavy, and then it dropped another $2. So these intraday trades is because people are looking for key areas and only playing those areas just off of yesterday's close. So the stock went negative. You got players that just play off of this zone. And when it broke down and went to here from 107 to 105, that's a $2 move. Get out. Then they probably got back in again, got out. So when you start to look at the chart from support and resistance, it'll tell you where the players is. You can see the massive volume in these critical areas because you know that it's in a zone. Let's go back out to the daily again. Let's go another day. 25th. So ideally, after this massive rundown, buyers stepped in. This was a given to have a nice bounce day. So let's go back down to the 1-minute. So again, notice that it bounced, come back up to previous support, resistance, popped, and then you had a whole bunch of confusion for the most part of that day because again we're going against the trend. And then you had about a 427. Highest point was about a 430 move. The lowest point to the highest point, right at $5. It's another bounce of $5 or so. So this would be, playing against the trend is when you see it gets clobbered or it's moving back and forth or so on and so forth. It's not a clean breakdown. So you see those days are considered as consolidation days or whatnot. But the days that it actually move, when it's going with the trend, it dropped down. Days it wasn't, or long days, it was trading this way. When it was trading with the trend, it went down. So when you're looking at that trade, that's how you got to kind of look at it. And let's go another day. I'm going to see if it broke down some more. So next day, it came back and tested resistance again at 103.36 and tried to wick out. Now, some people probably would have looked at it and said, you know what, this might go this way now. Maybe it's doing this. Depending on your trading style. Not really sure, but we're going to see if it actually works. So this may bounce, squeeze, and then drop down or go this way. Let's see. And as you can see, it broke down from out of the angle. Let's go down to the 5-minute. So when you're looking at this again, went sideways. They basically just trying to accumulate, in my opinion. And then right here at this support, it's where, it broke down. Right here was resistance support area, 103.36. Broke down, broke up under, and went back up under, and then flushed. So this was just another bounce because they were trying to go the opposite way. Another $5 move on a bounce. So let's go into the new week. All right, so we had lost internet connection there, but I'm back up and going now. So again, we had a big drop off, and then people trying to take profit on this day. So that was the 30th. So let's zoom in on that. This was pretty much like, to me, you're praying off in entry date zones, but again, it was real choppy. This is the reason why, you know, you have to be mindful what area you're in when you're playing trades, so on and so forth, because this really didn't have nothing to play off of. So I probably, if I was a trader that day, I would have sat on the sidelines. So let's go back to the daily. Now we coming into October 1st. We had a nice little push up back into that zone. Let me go to the second. Look like they're trying to build it up, but you see how that 103.36 area right there keeps getting rejected, keeps wicking out, but they end up closing below it. And when I say a rejection, I'm referring to the close or open price of that stock. Like, the wicks make a point, but if it closed above the area, above the line, like it did here and here, or on the line or close to the line, then that lets me know that that was a bit of a rejection. Because if you see how right here, when it closed above the line, next day was open green. It closed above the line, so it rejected this line, and then when it gapped down, it opened below the line, which gave everybody the indication that this wants to go lower, so it flushed. Then it came down to this area and closed above the line, which made this a rejection off this line. So going into the 3rd, this is October 3rd, 2019, we finally get a push into the opposite direction. So let me remove this drawing. So it was building support off this area to go higher. So like, what would I be thinking? Well, on this day, with this rejection, and this day it opening up above this line. So you might have had a drop down, like a bit of a V or something like that morning. It opened up here and then went down and then kept going back up. So let's take a look at it. So opened up, went down, and then, like I said, it made a V. So that day it actually rallied back up to 109. So let's talk about that range. So from the low to the high, it was about $7. Again, we're going against the overall trend is down, right? So the overall trend is down. So ideally, when the overall trend was down, we had a good $12, $15, $17 move. When the trend was going up, when we were going against the trend, we only were getting $5, $7 moves based off of the areas. So as you can see here, just like before, we only really had a $7 move. I told you the range was between 5 and 7 when it's going up. When it's going down, it was 10 or above. So that's where it's headed now. Now my thought would be that, hey, it's trying to go from this zone to here, back up to this previous resistance support area. It's the only thing I can think of that the price is trying to return to maybe go back up, get more longs to get into position to go back and slam it down again. But let's see. And then they immediately reversed it. So this right here may be the beginning of, if it can hold 103.36, it might be the beginning of the bounce for it to go the opposite direction. Now, what do I mean by that is that it went down, came back up, and did this. So it might continue to do this in the opposite direction after this big down move. So honestly, do we know? No. This is where we play probability on stocks to figure out where it may go. It may come back up here. It may try to do one move to give this all back. Don't know. So that's why you continue to trade. My hunch is that it may go lower. It may be building up to go up to here and just to come back down and then break or keep going down because of the news. Not sure, but we'll see. Going into the next week, the 7th, we had an indecision. So October 7th was, downward pressure. It closed towards the tip of the low of the day. So I'm thinking it's probably going to go down some more. We had pretty much right here consolidation. Now it's 1, 2, 3, 4 days of just sideways kind of price action. But it's holding this trend going up. It's also holding 103.36. Next day, we had us a gap fill, gap up. Now, why did we have that gap up? Again, looking at the chart, I said that it can either go up and down and go this way, or it would have continued to go down. But this is sideways price action, so this will be considered consolidation. And said, hey, look at it's consolidating. The previous week high is consolidating up under, and it's also on this trend line. As I stated, I said it may go higher because of the 103.36 and the trend line going up. It actually may go higher, and actually the next day it popped open. And look, what was the range? $7, $7.53 from was the range for the day. So let's go down to that day and take a look at it. So what it did is it went around this area, dropped, and then went higher. Grinded back up to 118. Okay. Break this down. Let's go another day, which is October 10th. So October 10th, it went up higher, slam, and then kind of just went sideways, and then eventually went to 122.55. That is a really, really nasty chart. So let's take a look at it on the daily. Yeah, that was a really nasty chart. So right here, or somewhere up here in this area, it's probably right here. So look at that line. This right here was playing as resistance, and then it left away. So it hit that line at 121.96 and then pulled away. Now, go back to pre-market after hours. If you take a look at it, it actually broke over that line. But you could see that was a zone or an area. So to me, they want this stock to go higher or something. Something's out there that want to make this go higher. And this could be just a significant bounce the opposite direction for a bank or someone very large that's trying to get out of this this short position they've been in since the top. You probably got somebody that came in around there and just made $75 move over the last couple 15 bars, which will be the equivalent of almost a month move down, and then they're releasing shares to get themselves out of it in this position. Could be, I don't work for an institution, so I don't really know, but with that sheer amount of volume and shares and understanding trading, I know that they just can't load up a particular account all in one day. So this might have been a multi-day move for it to go up. Don't know. So let's go another day, which will be October 11, 2019. You see that it jumped up but flushed lower for the day. So this might be a reversal to go back around the other way. Not sure. But these 2 days were very choppy. There's a lot of confusion around these areas. Stock didn't really know what it wanted to do. Wasn't clean. Going to the next week of October 14, 2019. Now staying heavy up under previous resistance support. So it acted as resistance here, still broke support. So this is resistance. So it's like it's coming back around and it's pulling down. So looking at that entry day, looks like this. It came down, bounced. Traders got happy because it was right around this support, previous support resistance, which they have been accumulating around. Probably put a stop loss somewhere here, trading below the 200 EMA on the daily, on the entry day chart. They got heavy, and then swung it down $4. Let's go another day, which is the 15th. And then they gapped it up above the 121 and let it reach. Now, this is an abnormal candle. Why? Most of your up days has only been what we talked about, 5 to 7. But this particular day, it was 10, almost $10.50. So let's look into that. And it rallied straight out the gate for the day. Also, let's look at the volume cues. This is very important to take a look at, and this is how you add that in conjunction and everything. This is massive volume off of this in a lot of range. So what they did, in my opinion, was they just trapped all the shorts. So when this stock opened here and then rallied very aggressively that day, that shows like there was a trend. And so like I was telling you guys earlier, which I had drawn for you, that the stock may go higher and it may try to fill this gap or fill this price action here. I said either it's going to go higher or go lower. So you have to have a bias for both sides as to which way it go. And then when the stock presents itself, then you place the trade. That's the key to trading. It's not so much having the right direction in that moment. It's having the direction for either way and then react based on how the stock move at that given time. That is probably the best advice when it comes to trading that anyone can ever give you, is to react. You can be proactive and know the charts, know the areas and so on and so forth. That's all good at having the support and resistance, but being able to react in real time based on what the price action is telling you is what's going to make you successful. So even if you're in this trade, I knew that when it did this and go up, this might continue to go higher. But again, I said, hey, it may go up and then pull back down. But knowing that when I woke up that morning and looking at the price action, I would have said to myself, oh, this thing wants to go higher. Massive volume into the upside. And then what did they do? Found the key area and then ripped it. So now we're back up to 138. So now we're looking at broken over 129. It's trying to get back up to 137. So let's go back to this 5-minute 133.80. So you want is probably trying to reach back up here. Right here, a lot of traders seen it hit this, came back, retested, they joined the party, and then held it the rest of the way because they knew the areas. They already knew what the support was and resistance was from previous days. So let's go another day. So this day pretty much was a rejection day. Shorts and longs probably tried to get out because they just had this massive rally up from the break. Remember, it was holding trend. That was the trend. I showed you the trend here before you even got there. So it's just pretty much in an uptrend. So we've changed directions. This was the bounce. And as I tell people in other videos, when you look for confirmation that we're going the opposite way confirmation was here. We had a massive pull down, then it bounced, and then it held. So you made you a low and made you a low, and now it's going back up. Came back, bounced, didn't break trend, and then kept going higher. We're going to do a few more days just to kind of wrap up this month to kind of give you an idea where this went. So again, it opened up, massive volume came in. Nice move, $9 move. So the previous time it ran up, it went $10. Previous time after that, it was only 5 or 7. So this is showing you that buyers are back into control because now the pendulum is starting to swing. Before, when it was dropping down, it was a $10, $12 move on the downside and only a $5 move on the upside. Now it's changing. Now you got a $10 move on the upside, and then on the downside you only got a $4 move. So now the pendulum is shift. The dynamics of the buyers and sellers, or who is in control based on range and based on support and resistance and volume, is based on that ideology of, hey, the price is changing. I'm doing $10 moves on the upside now instead of doing only 5. So I'm breaking out of my mode. I have more buying pressure in that direction. That's how you psychologically got to kind of look at how price, range, and everything works. Hey, I'm moving this way because I want to buy more. So it's a $10 move. This was a $10 move. This was a $9 move. These moves was shorter than $3. This was $4.30. This was $4.40. This was $6. This was $5. This was $4 or $5. But all the up moves was $7. This was $7.50. This was $10. $10.50. This was $9.50. So it's letting you know I want to go the opposite direction. I want to go the opposite way. I already showed you that I will confirm that I want to go this way. And then I'm looking at the price action to see which way I want to go. These is all the different things you look at before the day start to give you confirmation on which way the market or stock may go. So that's October 17th. Let's go to the 18th. And then we get a rejection off of the support. So it gapped down that morning. And this is probably longs taking profit. Why is that? Well, let's look at the daily. We had us a nice little rally from off this key area all the way back up here, which was $34. Remember, when the stock is moving in one range in one area, we were getting $27, $30 moves. So now when you look at the lowest point and go all the way back up, you're looking at a $34 range. Hey, what does that mean? People might want to take some profit, which makes sense. So let's go back down. You see that it fell right around support and resistance, dropped, collapsed right back down to the previous support and resistance. Now you got to remember, guys, we drew these lines way back here. We drew these lines back in September. We in October still respecting the same lines of support and resistance. This is why this stuff is very important to know, or people use it to their arsenal, because stocks respect it. Came back up, respected, came back, and then created a miniature trend line here. And then it broke out. $2, $3 move, entry day. So these are like the small pop moves you can capture real quick. And then there's other moves, the overall trend move. Remember, we're still in an uptrend. Ideally, the support, and then it close up. So someone's come in to buy or whatever, but this was a red candle. But somebody came in and brought right around this resistance. We're still in an uptrend. So now if it goes up and then fails this area and then start moving down like that. So again, going back to the bias of trading this, when you're sitting here and you're like, okay, this is going up, and then, it may go back up here, maybe fail, start some type of trend line like that, and then start bouncing this way back down. Now that would make sense. Now why? Because you're looking at the overall trend. The overall trend or consensus has been down. We just bouncing into an area. So we go higher up. This is what you see. And as you go higher and higher up, you start to see a little bit more and more differently. So it's trends within trends within trends, and understanding all the charts and what everybody's kind of looking at. This may be the start of a down move. This might have been just an overall bounce off of the daily for the overall trend. So it was a trend within a trend. Now, you know, it may come back and then break over this, and this will be the long-term trend and continue this way. So it may do this. It might even do this type of move for you. It may bounce, smack this line, pull back, come over this line, pull back, and continue to go this way, which will be a longer trend, long move. Because now it'd be like this, and it's showing that support going up. Or this could be the continuation of the overall trend. It can bounce down, come up, bounce down, come up, maybe even pop over it, go like this, and then continue to go down. Never know. And this is the reason why you have to have a bias on both sides, so you can kind of react based on what the stock is doing. So I'm gonna fast forward this up a week so we can kind of get a concept of what was going on. So we had a bit of a consolidation right here at this line, which you see every day it popped up, but now you're starting to see the range is starting to get a little bit smaller on the long side. 7, 5, 6, 5.5, 6, maybe 7. So it went from doing 10s, 7 and 10s, back down to doing 7. So buyers may be drying up. The longs, this was 14, this was 9, this was indecisive. So right here is just what I call consolidation and indecisiveness. It's trading between a range of 129.22 and 137.09. So the overall trend needs to either break and hold 137 and go this way, or stay heavy under 129 and go this way. The overall trend is down if you're looking at it from a wider standpoint, but it can break and hold hold this 137 and go the opposite way. 137, 143. If you get over 143, it's going to try to return back to 52-week high. Let's go another week. So as I stated, it may jump up. So it gapped up over the 137.09 and crushed out the 143. So this is clearly a change in direction in the overall trend. So now your trend line looks a little bit different. So remember, we had the mini trend here, which started the actual move, was here. Now your trend is kind of like this. So did it pull back, crushed over the overall trend, which was down, and now we're in a true uptrend. Now, again, this could be, you may have to reposition your chart, and it could be going this way. But I wouldn't think it would be this until it break this line. But obviously it went up into another area. So it gapped up into resistance, right? And now it's treating it as support, which was 137.09. So that's a new move going up. That day, range was 11. So clearly the longs are still in position. So they just went sideways to exhausted for a few days, and now they're going back up the other way, and they gapped up. So October 28th was a big day for those longs, because they were looking at it from a standpoint of, hey, y'all gapped up, y'all did this, we're in the money. So when it got over that 137, just kept going. hit into the 151s. '28th, kept going. So now we still respecting the same lines. So my ideal is that it's holding heavy under here. So, and it's trying to protect the 143 area of our original entry off the orange line, but the blue is protecting that 143.88 area. So it can gap down and crush and hit here and keep going, or it can continue to go up. If it continues to go up, it's going to break over the monthly high and then continue on to 176 will be ideal. Let's go another week. November 8th is the end of this week. And again, guys, it broke past down support, made a resistance, came back to the next support. Now it's trying to protect 137. So it protected at 137 and then it dropped. So this was the depth. It dropped down, had a lot of massive volume on that day. So let's take a look at that day. That day was pretty wicked. It was a pretty massive drop down after hours. And then everybody was scrambling that day to get out of their positions. And then that's why you had this massive swing like that, and then a little bit of settlement. So this is the reason why you got to look at all bias. Like, you could have saw this coming in. So this day when it dropped and hit this massive, people probably got in short, and then it just collapsed and dropped below the trend line. Now it's out of range. So now this. Let me see something here. This line doesn't make any sense anymore because it then violated it and dropped down. Let's go another week. And then they ripped it right back up. And it just hit every support line for that week and kept going. Massive volume. So the banks basically dropped it back down here, shook out all the weak longs from the original trend, which was here. This was the original trend. Shook them all out. And then they ripped it back up higher. So this is where you have to look at the support and resistance and know that, hey, now that was a little bit of a resistance there, right there, which ended up playing a very pivotal part into this move right there, 118.40, and then they ripped it higher. So guys, that's kind of to give you an idea of how support and resistance can help you in your trading. Be sure to go over this video a couple times. There's a lot of information I gave you in that video. So if you have any other questions, concerns, drop them in the comments. Hit a like button, hit the subscribe button so we can get this information out to other traders that's trying to get better at it. And guys, like I said, tell everyone in the Discord and all traders out there, stay studying and stay focused.